Hi, this is Greg. Welcome to the channel. On this channel we talk about markets and investment and all of the things that will make you a better investor. Now in this video I'm going to do an update on Viacom. Viacom is a stock that we looked at after the Archegos collapse, and I've done two videos actually on this channel, which I'll put in the description below and also up here somewhere. So you can take a look at it. Now on the last video I talked about at least three hedge funds that started going into the stock with sizable positions, and one of them has George Soros's name on it. So these are big institutions, and so I was getting kind of excited and I took a new position with some options. I bought the 55 strike price January 2023 options. I actually replaced a stock position with those options because I'm looking at this more as a trade, and I did this several weeks ago, and since that time basically nothing has happened. Not that I expect things to happen just because I put positions on them, but I was expecting the stock to start to move simply because of the incredibly low valuation. And we went into detail on this in previous videos. The thing that attracted me to it initially and on an ongoing basis is it's so insanely cheap relative to its peer group. Okay, as we said on previous videos, Viacom is basically a media conglomerate. And in the original video that I did, which I'll put in the description, I went through basically the universe of media conglomerates, and we took a look at the relative valuations, and we were comparing it to Comcast, which is more than double the valuation. At the time of that video, and I think it's still pretty relevant, it was 24 times earnings, whereas Viacom is like 10 times earnings. This is a ridiculous difference because they're basically all in the same businesses, and while you can argue that Comcast might be a better company, it does not deserve more than 2 times the multiple. So anyway, I'm more than a little bit frustrated by the lack of progress. I mean, we saw a little bit of strength in the stock last week. It's up to around 42, but it's really just like, you know, not too much volume, and the price action is really crappy. So I'm really at a loss to understand this. So in this video we're going to dig into it a little bit further and see if we can find the answer, and then at the end of the video I'm going to make my recommendation to you as to if you should either stay in the stock or if you should initiate a new position. So I think the best way to get going here and start out is let me share my screen with you, and we'll take a look at some of the fundamentals, and we'll see what's happened over the last few weeks and month, and then we'll see where we end up, and we'll see where we come out on the recommendation. Okay, so with that, let's get right into it. Okay, so here is Viacom. This is where it closed on Friday, and you can see it's a little bit above 43. That's where it closed, and you can see over here on this chart it's been flat. But let's take a look at the historical quote, and we'll see where we are. Okay, so you know, here's the 6-month view. I mean, look at this. This is the Archegos fiasco, right? Where it sold off from about 100 down to, you know, 40 and change, close to 50, and then it continued to go down, hit 40, it went below 40, and then you know, it's been in and around 40 ever since then. This is like an insane flatline basically since April. I mean, the thing's basically flatlined since April, and it's now, you know, mid-June. So really remarkable. It's very difficult to understand this, and in addition to seeing some 13F action with the hedge funds, which is what I talked about on the last video, take a look at the earnings. Okay, let's take a look at the earnings here. Look at this, first quarter earnings were like awesome. This is first quarter earnings here. You know, let's take a look. $1.52 a share, right? $1.52 a share. And you can see over here, $1.52 a share. It beat consensus. Consensus was $1.22, right? And it beat consensus by 24%. And the stock did nothing. I mean, this, for anybody who has studied this stuff, like me, and I'm sure a lot of you, this is, completely perplexing, okay? And, but, this is what makes the stock market so interesting. Sometimes things don't make sense, but other times they'll turn around and surprise you, and you'll end up either being right or wrong ultimately, okay? So let's just take a look again at the snapshot. Just want to do something here. Okay, you can see the PE is still around 10, right? And the shares outstanding has not changed since they did the stock offering when the stock was at an all-time high, like 100. That caused some dilution, but we proved on the last video that in and of itself was not enough dilution to cause what we're seeing happening now, where the stock is just not doing anything. Now, in addition to all of this, the earnings, the multiple, and everything else that's been happening, certain analysts on Wall Street have come out and said that they see that Viacom could be a potential acquisition candidate. All right? Somebody, one of these companies, Comcast or somebody else, could want to buy it for the streaming service to achieve more scale in their own streaming service, because they have Paramount has a lot of great stuff, a lot of great movie content, and all kinds of great content that can be added, and they've got some other great assets. Now, if Comcast were to purchase it, they would probably have to divest CBS because they already own NBC, so they would not be allowed in terms of regulation to own both of those. So that's one thing to factor in. But there are a lot of other media companies out there that could potentially acquire this. So that's another thing that we're looking at that doesn't make any sense. Okay, you have hedge funds showing interest, you have great earnings, and it's an acquisition candidate, but yet it just sits there. Okay, so let's go back to the main screen, and I'll give you some more thoughts on this, okay? Okay, so let's briefly summarize where I think we're at on this stock, and then we'll talk about strategy and what we should do from here. Okay, I think there are three major reasons why I think something could happen here, even though it hasn't yet. Number one, valuation, okay? Talked extensively about this, but with a 10 times earnings, this is the cheapest media company that has any size to it in the entire media landscape. So that's number one. Number two, the company is doing great. I mean, the earnings of $1.52 a share, that was great quarterly earnings. A lot of their businesses are hitting on all cylinders. So that's reason number two. And then reason number three, when we look at the 13F filings, we see some very significant hedge funds and other institutional investors taking sizable positions, including a fund with George Soros's name on it. Okay, so there's institutional interest in addition to the other two reasons. Now, I can't explain this. I mean, maybe certain bigger players are just waiting to see what happens, and they're not committing because there was such a tremendous sell-off having to do with Archegos. Maybe there are who knows, legal reasons why some people don't want to get involved, because it was announced last week that the Justice Department is looking into the whole situation with Archegos. So that could have something to do with it, but that's hard to imagine that would keep somebody out of, making an honest investment in the stock. So I think, what I am going to do, and what I would recommend that you do, if you either own the stock or if you decided to play this with options, as I have, and as I said earlier in the video, I did sell my stock position and I replaced it with these 55 strike price January 23rd long duration options instead, because I'm playing this like a trade, because I think something might happen in the intermediate term here, such as there might be an acquisition or news of an acquisition, rumors, whatever the case may be. And if the stock goes up 4 or 5 points by having those options in position, I'll basically double my money instead of make 10 or 15%. So anyway, in conclusion here, I think as an update to this stock, what I would say is, if you have a position or if you're thinking about taking a position, this is as good a place as any to go in. $42 a share. I mean, it's traded between 39 and 43 over the last, since April basically. So it seems to be like rock steady almost in this trading range. So I would, if you want to play this, I would feel comfortable going in around 42. Let's give it some time. Let's let it cook. Let's let it simmer a little bit on the stove and settle down a little bit more. And I'm probably going to keep this for a couple more months and see what happens. And hopefully in the next couple weeks, we'll start getting some action on it. Okay, so thanks for joining. And if you got value out of this, please like and subscribe. And don't forget to hit that bell so that you get notified every time I come out with a new video. And I try to put out videos at least 2 a week, and we talk about relevant topics to markets and investing, with the single goal of making you a better and smarter investor. So anyway, thanks again for joining, and I'll see you on the next video, which will be coming your way very soon.